Actually, which are the most profitable emerging countries?
Well, one of the countries that we're looking at particularly at the moment is India, where there have been a number of government reforms announced, which have led to a sharp rally in the rupee and also in Indian bonds. But this is a market that's all about value, so you get a yield of over 8% in the government market, and then you have this upside potential in the rupee. This is obviously not an investment for the faint-hearted, but nevertheless it remains very attractive on a long-term basis if you believe in the Indian potential story. Other parts of the world that we like are Asia generally, where you get a very good diversification of different markets across the credit spectrum, but also in terms of different geographies, different political systems, which means that the markets don't necessarily move in the same direction at the same time. Then, of course, you have new opportunities in China in terms of the offshore renminbi market, which has a higher yield than it used to, and also greater diversification and liquidity as the market grows. So from that point of view, the offshore renminbi bond market is definitely worth another look as far as investors are concerned.
In your opinion, an European investor have to prefer euro or local currency?
Well, the euro story is obviously a very complex one at the moment, and to an extent it will depend on the investor's individual views of what is happening in euro and the relationship between the euro and the dollar. However, we believe that Asian currencies on a risk-adjusted basis represent a good medium to long-term position, because if in the event of further weakness inspired by the euro debt crisis, that implies a weaker euro and Asian currencies will do better. But even in a situation where the global economy improves, then Asian currencies should also do well, because they tend to outperform other currencies when markets improve. So from that point of view, you are, I think, better off in Asian currencies than you would be with a euro strategy.
What's your China's growth outlook?
Well, this is a $6 trillion question. It's one that many people are discussing at the moment. The latest figures are good, but of course, you know, when you have figures on a month-by-month basis, as we do from China, you shouldn't extrapolate too much into one or two sets of data. However, it does seem, and even some of the more pessimistic commentators now believe, that growth probably bottomed out in the third quarter of 2012, and that there is potential to smooth China's growth path in the 7.5%, 8% range over 2013 that the government is looking for.
What about the Indian rupee?
Well, the Indian rupee has rallied in recent weeks given the sets of reforms that we've seen, and that is a very encouraging development on many fronts. But the rupee is still by far the world's most undervalued currency on a fundamental basis, at least one of the major currencies. Remember that India is an incredibly important part of the global economy now. And therefore, from that perspective, there is genuinely very good potential in the rupee. Again, it's going to be a volatile situation, but nevertheless, if the government is able to push through the reforms that it is looking for, there's an awful lot of bad news in the rupee-US dollar exchange rate, and from that perspective, that could lead to some very substantial returns for investors who are willing to take that risk.